Give me some Coca Cola. Yes, Coca Cola. KO. No, we're not talking about the good stuff. Yes, if you know what I mean. Nothing. I'm just kidding. Absolutely. Don't do that at home, kids. Absolutely rubbish. You don't want to do that. But anyway, all jokes aside, let's get to it. Coca Cola, one of the biggest companies for the Buffett. Yes, Mr. Warren Buffett, the Oracle of Omaha, the gun, the star of the show. But it's no longer its biggest in terms of money maker now, but it was back in the day, getting that sweet dividend from Coca-Cola. But Coca-Cola has been a little bit of a, well, I wouldn't say a little bit, but just continues to slowly go up. But to me, is it turned into an ETF? Is that what it is? It gives you the dividend, it goes up 5-10% a year. Nothing great, nothing extravagant. Well, we're here to find out for you right here at Barry Charles. If you like the video, like and subscribe to the channel and share it with your friends. Will be much appreciated. But yes, we're going to look at Coca-Cola right here. We're going to do a stock analysis. We're going to look at earnings per share, PE ratio, revenue, net profit, return on invested capital, total assets and total liabilities, free cash flow, the whole works. You get it all here at this channel each and every week. And if you stay right to the end, I will give you the intrinsic value of Coca-Cola. Remember, this is the ticker KO, not the international brand, just a straight American one, Coca-Cola. Let's get to it right here, right now at Barry Charles. Yes, Coca-Cola, for anyone who doesn't know, is the absolute king of the drink makers, absolutely flying. Some people would argue Monster is now, but Monster beverage, but we'll get back to that. But Coca-Cola has been the long-lasting one and continues to be one to buy. So Coca-Cola, is it an investment now? Or have we all missed the buck? We should have been in it a long time ago. Well, we're here to talk about it now, right here, right now, at Barry Charles. Yes, well, financials of Coca-Cola. Let's have a look at the financials. Starting off with revenue at $43 billion in 2022. In 2023, went up to 45 billion. So up $2 billion. So a very small gain. So you're not even getting a 10% from that side. Net profit, a little bit better there, at 9.5 billion to 10.7. So that's over 10%. But it's still slow growth. Not going to fly to the moon. You can rest assured, that's why I'm saying this is a potential ETF stock. If you want a safe stock, this is probably a stock for you. Let's just be honest. If you want it to be a growth stock, I don't see that happening at all. Earnings per share, 2.69, not too shabby. PE ratio, 22. Well, they're thinking this company's growing. Is it a little bit of rich? Well, we will find out when I do the intrinsic value. 52-week range from $51 to $64. It's in the $60 range roughly at the moment. So if you got it at $51, maybe it was not a bad buy. That's with stocks like this, just buy it at the lows. If you can keep buying it at the lows, not the highs, then potentially you can make some decent money over time. That's the only way to do it with some of these stocks that have matured. In my opinion, just buy when they dip. Dividend yield of 3% with $1.84 paid over the year. So it's pretty sweet dividend for a company that's been around a long time. So it's actually a pretty good company in terms of dividend and pretty reliable. Well, always been reliable on the dividends. So it's probably a stock you can potentially look at. But can they afford the dividend in 20, 30 years' time? That'd be the question mark. They've got to continue to get the revenue and their profit going. Short interest, not much short interest in this company, less than 1%, so 0.61. So this company looks like it'd be here for the end of time. Market cap, $258 billion. For a company that's been around so long, you'd think it'd probably get to $1 trillion. But yeah, it hasn't, never got to $1 trillion. So maybe there is a chance to get there one day, maybe, I don't know. Just interesting that it's never got up to that sort of level, so we will see. Total assets has gone up 92 billion to 97 billion, so very good. And total liabilities has gone up a little bit as well, 66 to 69, but not as much as the total assets have, so that's a positive. It's a good range between total assets and total liabilities, 28 billion gap there, so that's good. But long-term debts, quite a bit, 38 billion to 35 billion, that's a lot of money, folks. But their free cash flow is more than that, so they easily could pay it off right now. Would I do it? Depends if what they want to use for. Do they want to do acquisitions? Do they buy out Pepsi? Imagine if they bought out Pepsi, folks. Woo-wee! That would be a game changer. That would be a monopoly on the market there. And Pepsi just disappears. Well, that's potential if they want to get bigger. That's one way to look at it. Shares outstanding. I was shocked at this 4.3 billion. They've been diluting you for years. Diluting you. I was stunned that Coca Cola dilute you, but they do, folks. They dilute you to the hill. But 14% on a matured company in return on invested capital. They know what they're doing. The management team seem to know what they're doing. So that is very good. For every dollar you put in, they're making 14 cents. So they are doing something right there. And if you look at the 5-year range, you've been up 25%, so 5% a year, not good. But that's pretty much what you're seeing in the revenue side. So yeah, that's what I mean. It's like an ETF fix. Can I see it jumping up quicker? Potentially, but I think for this company, they have to acquisition. They got to buy the companies that are lower than them. They can give them more share and they can produce more product. That's probably what Coca Cola has to do going forward if they want to grow the business. Pepsi might be out of their range, too rich, but other smaller companies on the way up. I mean, I know they brought into water companies and that in the past, but they need to find the next big thing and take it, or create the next big thing. That's what Coca Cola needs to do if moving forward. Well, this is what you're all here for, folks. So what's the doom and gloom for Coca Cola? Health, yes, but it seems to be that health will never seem to take over the fast foods. Even though it looks like there's been a push away from that, even the fast foods like McDonald's is trying to get more quality buns. Can the fizzy drink disappear? Well, there's a potential it can. Absolutely, there's a potential. Will it happen? I doubt it. There's too many sugar crave lovers out there. But if you could get rid of it, it has to start from the generation lower to say no more. We just have water. Or we have a big family and can't afford to buy everything. And even though you can afford Coke, but if you stop paying for Coke and just have water, that's the potential. But I don't see it happening in any of our lifetimes, to be honest. I think this is going to be a machine around for a long time. But that's a possibility. So intrinsic value. Now we're doing Trade Brains Graham calculator. As I said, this does not calculate into a dividend, so you just got to take this with a little bit of grain of salt. So I give you the idea of what this is. It looks at the current share price, earnings per share, growth rate, bond yield, gives you intrinsic value. Okay, so Coca Cola, we're going to say roughly $60, could be different from time of recording. With the earnings per share of 2.69, at 5% growth where it is currently, you could be overpaying for the company right now at $51.90. That's what it's saying, the intrinsic value. And I believe it's lower than that when you add in the dividend. So we keep that all the same and add a growth rate of 10% instead of 5%. Then you're starting to look at a value company at pretty much $80. If you think they're going to grow their earnings per share to 3.9 and stay at 10% growth rate, then 115's on the cards, and nearly a double up from here if you think they can really get their earnings per share up and improve their current revenue model. So potentially a double up from here. But pre-warned, they could take 10 years on what currently the company is doing and has to raise their earnings per share to get there. So it could be 15 years before you get to there. And then if you think it can go to the moon and double its earnings per share to 5.4, then you're a $216 company minus the dividend. So what do I see right here, right now? Can I see them being a 10% growth company? Potentially. But I'm going to be more conservative and say 5. And to me, it's overvalued. The $51, I think you were starting to get somewhere towards it, but I think Coca Cola is always a stock that is potentially overvalued quite a lot. It's just one of those stocks that's got a premium on it. So to me, I'd stay away from it. But if you want a nice, slow invest when you're 20 all the way to 70, and don't worry, you're not going to go bankrupt. This is probably one of the safer companies to go with, no guarantee. As I said, if they're potential in their money, but more than likely they will be here to stay for a very long time. Not financial advice, do your own research before you invest in any stock. But Coca-Cola is a potential stock that, for anyone that wants to just sit and walk away for 50 years and walk back and look at my bank account 50 years later, I have double my money. Well, obviously you want to do more than that, but maybe 2 extra money. This is the stock for you. But if you were expecting it to be something like Alf Beauty has recently, or Tesla in the past, you're not going to get it. But if you just want a slow, steady winner, Coca Cola is for you. Anyway, that is Barry Charles. That is stock analysis on Coca Cola and giving you a bit of intrinsic value on the company. I hope you've enjoyed the video. Share it with all your friends. Remember to like and subscribe to the channel because you are amazing. And as we build up and we go flying, we're going to go past 100 and then up to 200 and all the way to 1,000 for a start. Let's go, fans out there. Share it with your friends. Have a great day out there.